Righty ho, everyone, and welcome aboard. Thank you very much for joining me for this edition of Weekly Sunday Market Update. I think that's the title anyway. It's good to see you all in the room, and again, thank you for joining me. I hope you will get something out of the session, and if you would like to participate in the session by asking any questions, then please do so, or giving me some ideas that you would like me to comment on, then please do so. My name's Jeff Pine, by the way, those of you who haven't seen me before, and I'm a senior trader with Actions to Wealth, of course, who bring you this presentation each and every Sunday. Thank you, PH. Good to see you in the room. I'm going to share with you very shortly what I'm looking at for the week ahead, or what I'm potentially going to trade for the week ahead. And there's quite a few that I am considering, to be fair. And based on technical analysis, which is my thing, that's where I'll be sharing those ideas with you today. So let's get into it. I will attempt to get everything technically. Speaking of technicals, I will attempt to get everything shared with you as it should be. Now, which screen am I going to show you? That one, I think, would be the one. And you guys will tell me, of course, if you are seeing my EuroCAD monthly screen. That would be good. Hang on, I'll turn the chat on so that I can actually see your answers. That would be good. EuroCAD monthly. There's the chat. And the good afternoon, PK. EuroCAD. Yes, yes, yes. Awesome. Thanks, guys. Okay. The reason I'm showing this is because, wow, some months ago now. In fact, I'm not sure if anybody who was in the room was at the Bali trading retreat, the last Bali trading retreat. I was flagging this as a short, and I'm still of that opinion. And the basic reason for that is because of these failures of EuroCAD to go through this price. Of course, at the time, when I did flag this as a short, we did see, or we had seen, this particular, and I'll get a pen going so you can probably see it a bit better than my cursor, uh, or even laser pointer. There we go. That's a bit better. So I was looking at these three, or four actually, as failures of price to get through this, what is it, 159 odd level. And eventually it did. So punch, 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 punch. Eventually it got through this level and hit the 161 plus margin, put in a reversal bar, and then a second reversal bar, which is a lower high, of course. And then, of course, we got this, well, I call it dreadful. Well, if you were short at the time and didn't take any profit, it's dreadful. If you were short at the time and did take profit, then it wasn't dreadful at all. It was pretty good. Thereafter, we got another reversal bar, which basically in my world that cancels this one out because I call that the prickly pear. It's got prickles on this side, it's got prickles on that side, so I don't want to touch it. But what I do want to see next is this buyer bar, which then tells me if the buyers are in control, this is going to make a new high. That has failed to happen. So my thesis begins there. What I'm actually seeing is a potential false break of this level here, which of course has been or has proved to be failing before. So that's what that looks like in my eyes. I see the break, and then I see price come back underneath that level, and then I get this buyer bar. That's the one that interests me greatly. So I want to put an entry underneath that, and I did, and I put my stop loss on. Actually, I can't remember where I put my stop loss, whether it was up here or here. I think now here would be the prudent place to put the stop loss. So I will still continue to have that opinion. But what's happened since and recently is a few things that may have got well, they did get my attention. I shouldn't say may have, they did get my attention on the way to this particular entry point. And I'm going to share that with you now. There were opportunities on this chart, which is the same currency pair, of course, euro versus the CAD. Here's that breakout that we looked at. Remember, we had a big bell over here. And that is the breakout, well, the false breakout area, in my humble opinion. But look at what happened when we did get to that level, that 161 odd level that I was, or 3 odd level, whatever it was that I spoke about. We had some reversal bars and the failure again to get through this new level multiple times. Now we're getting lower highs in that area, which excites me. Here's what my thought process is, and here's what I'm seeing. Every time I see a key reversal bar, which is what that is, it's what that is, it's what that is, it's what that is, that is, and guess what? We've now got one right now. The reason I like these is because, well, the proof is in the pudding. When you get one of these key reversal bars, you get selling. This one here gave us 1, 2, 3, 4, 5, 6, like weeks. These are weeks of price below the entry, which would have been there. Not super exciting, I've got to say. But if you had your stop loss here and were willing to stay in this trade for eons, if you like, months, then you pick this up. And the bonus there is when you see this one, stop loss is up here, don't forget. When you see this one, you get in again at this level and you pick up some more. Then you get the rally. Of course, trade management is everything. You've got to take profit down here at some stage. One would suggest that level there that I've drawn on my chart would be one of them. Try your stop, whatever you want to do, however you manage your trades. Then you get this rally, and then you get another key reversal bar. Sorry, I should explain what a key reversal bar is, should I not? I call them game changers, and I only trade them if they're game changers. What is a key reversal bar number one? Key reversal bar is a bar or candle, if you like, whose high in this case is higher than the previous and closes on or near its low. That's the definition of a key reversal bar, which I call a game changer. But to be a game changer or to qualify for a trade in my world, it needs to be doing exactly that, changing the game. The game here being a rally. Got the key reversal bar, the rally's over, and we get lower prices. Here we have a rally. Here we have a key reversal bar. The high is higher than the previous, closes near the low. Enter here, pick up the bickies. Rally, same thing, key reversal bar, higher than the previous, closes near the low, trade it short here. Stop losses up here or here, by the way. You can trade the candle, but in my opinion, you're far more likely to get a better result if you put your stop loss wide. And here's why. These sort of things happen all the time, where they come back and test that level and go again. And guess what? There's another key reversal bar right there. The concern I have here, and you may have noticed on this chart, the reward is getting less and less and less. Interesting, but not disastrous, because I still think there's room for some sort of profit here before this makes up its mind whether it actually wants to break through this support level or wants to go and attack that resistance level yet again, right? So here's the way I'm going to attack that. I put this trend line on the chart. I see I've got this key reversal bar here this week, right? That's what was delivered to us last week. I see absolutely no reason why I can't put my entry here, my stop loss above these highs, and take some profit when it hits the trend line. that's what's in my mind straight away. And that's likely what I will do come tomorrow morning, should the market not gap and give me, I don't know, if it gaps up here, no big deal. But if it gaps down here, then I've lost my entry. So I won't be doing that. So that's my technical take on euro versus the CAD. These things, guys, are, if you haven't considered them before, very, very worthwhile. The key reversal bar, which I call game changers. But don't trade them willy-nilly. Don't just jump in the market because you see one. You want to have a rally before, right? And you want to have a momentum as well going in the direction that you're trading. So key reversal after a rally works. Key reversal after a rally works. Key reversal after a rally works. Same, same, same. As I said, my concern is these rewards are getting far less. So we're coming to, as always, a turning point. Whether that's going to be in our favour or otherwise is yet to be determined. So if you do get into the market here, or if I get into the market here, I'll be taking profit so that if this does bounce and go long, I'm going to be protected. But here's my target area, right? That's my first target area. If I manage to get into this, not on the weekly, but maybe on the daily chart, then that's going to be cool because I'll have plenty of room down here and I'll get a good chunk of profit before I have to take some. So that's euro versus the CAD. The next one I'm looking at is this one, pound versus the Aussie. Aussie's been really strong. Um, you may say there's reason, well, there are reasons for that, obviously. Gold rallying, every time gold rallies is cool for the Aussie because the Australia's got, what is it, the third largest deposits of gold on the planet. That's not the only reason, of course. The interest rate on the Aussies, on the Aussie dollar, is, I think, the highest at the moment, as a matter of fact. So you've got an interest rate differential in the Aussie's favour. That's keeping it buoyant. Um, Political tension, geopolitical tension has failed really to keep the Aussie under control, which is interesting because the Aussie is a risk on currency. When the risk is on, then the Aussie does well. When the risk sentiment is off, which you would expect given the circumstances that we have, um, the war, this is plural, number one, but it seems that the market is discounting it or ignoring that these days. It seems to have gone away from a risk on point of view. Anyway, so I think the market is at the moment considering that it's a risk on scenario. So the Aussie is well and truly in favour. That's not why I trade the Aussie long at the moment and the pound short. It's because of the chart, because I'm a technical analyst. I don't see any reason why the pound should overpower the Aussie at the moment, given that we've come off this reversal. I call that a double top, right? People will say, well, hang on, no, it's not equal. Well, the candle highs and lows are, well, sorry, the candle highs are not equal, no, but these are. But the bodies of the candle pretty much equal with that high. That doesn't bother me. To me, this is a high, and that is a high, or a top, and that is a top. Therefore, two tops, what does that mean? Double top? I'll take that as a double top. Then we've got, oh, look at this. Key reversal bar. Also a key reversal bar. The one thing missing there with those key reversal bars is there's no rally before. And that has hindered my progress actually with this pair because I've been unable to trade it, certainly on a monthly basis. But if I go to the weekly chart, it's a completely different story because you've got this key reversal bar or game changer bar, impossible to trade right there for me. Why? Because This has been just going hard, 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 hard. And one candle does not mean that I trade this short as a reversal of trend. Just doesn't make sense to me because I've done it many times before and failed. But what does make sense is you go into this consolidation period or range, if you like, then you get a key reversal bar, game changer bar, this one here, higher than the hot previous, closed on or near its low. And if you wanted to wait, then fair enough. You also got this one, which is an evening star. It's not the best of them, but it's an evening star. So you've got confirmation of the key reversal bar, the lower high. You even had one here if you're willing to trade it. But this one here is much, much better because it broke short, came back, retested the highs. Key reversal bar or game changer bar, if you like. Then you got the sell-off. Then you got a mini rally, retesting the breakout area. Then you got a game changer bar, and then away you went. Bang, 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 bang. That would have been the trade, that one right there. If you've missed that, then not an issue because you'll get another opportunity, in my humble opinion. However, right now, I don't think is the time to take that opportunity. Why? Well, I'm sure some of you can see that there's a pattern emerging here, and we are at a support level backed up by absolutely beautiful LT. Like it. As a matter of fact, I'll put it in there for you. There is a left shoulder, a head, and a potential right shoulder. So there's only one way that I would want to trade this right now if I'm not in a trade, and that's not short. I think there's a strong opportunity to trade this back to this area here, where all of these reversals are before. So it's been strong resistance at this area. Got a resistance trend line, and that zone there will test this pair dramatically, in my humble opinion. So I don't want to, if I don't want to enter short pound Aussie at the moment, what I want to do is wait for this far better entry area. Do I want to trade it long is probably the biggest question. It is still ranging, absolutely is still ranging. And guess what? This is potentially a sweep of that range, and we may get that right shoulder, which gives us an inverted head and shoulders off the trend line. If that's the case, and we get a nice signal for that, something like that would be okay, an engulfing bar. Key reversal bar in the opposite direction, or a pin bar, whatever you want to call it. That would be a nice way to trade that as well. So I'd be happy with that. There's also another consideration for this to slip through that support area. Change of character. Sounds like somebody's been looking at ICT, which is good. I like the fact that people are looking at different ways of technical trading. Awesome. So yes, change of character could well be. What I'm looking at is this area here in very, very, very strong focus because I think one of two things may happen. One will bounce off that trend line and go to the next trend line, which coincides with these highs here. Or two, we put in a double bottom. And if that's the case, I'll then be looking for a false break of this trend line. So if the right shoulder becomes a little bit loose down here, then I don't have a problem with that. So I've got to be careful if I want to enter here to put my stop loss well below that level, because I still think there's a possibility that we'll get a double bottom there. Either way, the double bottom will be on this level of support, absolutely right. So it's a strong level. Either way, this is the reason I don't want to go short pound Aussie at the moment. That said, bigger picture, I am a bear pound Aussie. So this is the one thing that's hardest to explain to people. I'm happy to go long to get short, if that makes sense. Because on the, I won't call it, well, I will call it, on the bigger picture, this is going short in my mind. I can't call it intraday because I'm looking at a weekly chart here. But if I do go intraday, it won't be looking for shorts. That's in particular, if we get to this area here, I'll be looking to trade long up to here. I like the fact that people are agreeing with me. Awesome. Thanks for the comments, guys. Okay, so everyone talks about gold. Why would that be? It's amazing. Actually, I'm always interested in how people trade gold. And at the moment, I'm following this guy who trades it on minute charts or 5 minute charts. Can't remember. When I say following, I just like to see what people are doing and how they're trading it. And I don't like trading it on short time frames because I'm old, right? And I actually tried minute charts and just too much. Can't stand the stress. So when I look at a technical chart, or when I try to analyze a chart technically, if I can put it that way, what I'm looking at is a bigger picture, always looking at a bigger picture. And what I see here on gold, and we're on a weekly chart once again, is the potential for this to be a false break of not only this trend line, but this low here back in, when was that? 1 year ago, pretty much 1 year ago. There's going to be um, people such as me who will also see the potential for this to be a left shoulder, massive head, and a right shoulder. So this is very much a case of tipping point, maybe. So what I attempt to do is find the best area on here for the decision point. And the best area I can see on this chart for a decision point is at that horizontal level right there, where it coincides. So you've got a massive confluence right there at what, 43.32. That's what I'm looking for all the time. They are super, super, super duper, because once price hits that level, it will decide what to do, whether it's go below it, bounce off it, go sideways off it. Something will happen there, in my humble opinion. So when I look at this chart, I'm seeing game changer bar. As I said, impossible for me to trade because it's going against the most incredible trend you've ever seen. Then you've got this game changer bar, or is it? I didn't trade that because it came off its low too much. And wow, you really, if you traded that, happy days, good on you. But in my opinion, that is a super dangerous entry, which turned out to be absolutely fantastic, of course. Then you got this little game changer bar here. Not much of a rally, I've got to say. So we came off the high here, then got a little bit of a rally, then you got a game changer bar to hit this level here. No way would I have kept any profit beyond that level, or maybe left it open a little bit, but no way I would have done that. So now we've dipped below that level, that crucial level right there. We dipped below it, put in this beautiful tweezer bottom sitting here, for those of you who, or double bottom, whatever you want to call it, back above that level, and now shot straight through it after a little bit of a retest. I want to see this come back and retest here. It is a game changer bar after a rally, after all. And the analysis that I shared with you earlier on three of those currency pairs, Euro, CAD, Pound, Aussie, and two of those pairs. You can see how they work, right? So you've had a good rally here. Now you've got a game changer bar. I would consider this area here as prime territory for a target. Now, I'm not prepared to risk what would have to be for me stop loss here, entry here. I'm not prepared to risk that amount to trade it to there unless I can do so on a much smaller time frame. So if I get a little bit of a pullback here, maybe to this area, that would work for me on maybe a daily chart, maybe even a 4-hour chart. Don't often go below that. But that would be a good target area for me. Time's going to beat me, however, if I wait too long. Um, you may you may think that's silly, but that to me is the target area, not the price, but the confluence. So I want to see price hit that level in a timely fashion. In other words, hit it where they cross. Now we are on a weekly chart, of course, so there's lots of options there in terms of daily chart, 4-hour chart, 1-hour chart, whatever you like. But that would be my bias right now on gold to get it down to here and then look for a reaction. But it does look very much to me like that's potential for a false break and we'll get higher highs. Certainly than that and that may be challenging this area here. That's what I see on gold at the moment from a technical stance, which is where I sit. This one here is exactly how I see that working, right? So game changer bar on the weekly takes us down to here. Would I put my stop loss here and trade that to there? It will depend on what the market does in the morning or for the next couple of days, right? Um, Gold looks like a descending channel. Let me have a look at that. Sorry, I'm just looking at the chat, guys. Descending channel on. Okay, let me draw in a descending channel for you. I need a pen to do that, don't I? I'm not sure I can do this with any super accuracy. Where's my pen gone? Come here. There it is. No pen. Oh, pen. I've got to draw in here, haven't I? Okay. Channel. Here we go. Something like that. That's not going to hurt our analysis, is it? Because our analysis says we'll bounce off here. We'll go to here. The problem that I would have, well, it's not a problem. It's never a problem. Because as I said, this area here is of supreme interest. It doesn't mean that it's going to bounce. What it does mean is going to do something. It's going to do something dramatic. It could easily go that way. I don't have a problem with that either, as long as technically I get a signal that says, okay, this is going that way, not that way. But at the moment, I'm definitely favoring uh, the bullish scenario because of this. Remember, I think the first slide I showed you was Euro CAD in the reverse. This is what I love to see. False break of support. And that's providing me with 75% of the evidence that I need for a false break right now. On gold, look like a descending channel. Yep, got that. So we're all happy with that. The analysis says we're going long after we hit that support area. If it goes through that support area, then different story altogether. And that's why it's important to wait rather than just go nuts. So really, they are the three areas that I'm most interested in this week at the moment. Obviously, things can change throughout the week. You saw this slide before, and that's going to affect me. As I am at the learning curve, I want to check what is the basis to choose any pair for trading. Okay, great question. In my world, all I do is look at the chart and try to find out what looks like it could happen next. That's a very simplified answer, I know. Learning technical analysis um, is probably the most challenging thing I had to do when I started. Once I got the idea, it became far simpler because what I really need to look for is something that is continuing to happen. That is, as sorry, I can't go backwards and see you pointed this out. There's a descending channel there, for instance, right? Now, what happens in a channel or any area of support and resistance, if you like, price starts to develop a habit. That habit could be that it's bouncing. Uh, I hate it when that happens. Sorry, guys. Pen just disappears. Uh, what tends to happen, right, is price behaves itself. In other words, you create a high, you create a low, another high, another low. There's your basis for a channel, right? That's where your channel starts. You've got two lows that are doing something and two highs that are doing exactly the same thing in a parallel fashion. Then, once you've established that, you can develop in your mind, I suppose, what happens next. Now, what happens next off the bottom of a channel is you're looking for the top of the channel. This didn't happen. And here's why we have trade management that says, okay, if we get into here, we're going to take some profit just in case we don't go to the high. But overall, here's what's happening. We're going from the bottom, the top to the bottom, bottom to the top, top to the bottom. So that's what is now an incredible um, dichotomy, if you like, at this point. Here's what will determine where we're going next, in my humble opinion. How do I know that? Well, because technically I've got resistance here, support here, support here, support here, resistance here, support and resistance here at this very level. So in the space of what this part of the chart, yes, it's a year, it's a whole year, but it's telling me that this level is super important. So when I'm looking for a pair to trade, I'm looking for something that fits that criteria, where we are at a support level or a resistance level that is very, very prevalent, if you like. And those that have been resistance and support are by far and away the best of your key levels. If they're just resistance or just support, they may well be fine. If been hit, multiple times, fine. But if they've been resistance and support, then they're the levels that you really want to focus on, right? So when I see that level there, as I said before, it's got confluence. I'll be stunned. I've been stunned before, guys. I'll be stunned if we don't see that level in the near term again in price. Now, am I willing to bet my house on it? No, because the markets don't work that way. But technical analysis does work that way because price does remember these levels. It's not price, right? It's people taking profit. It's people getting in the market off support and resistance because they know that there's going to be orders there. That's the glory, if you like, of being understand or being able to understand what these levels are. If they're bouncing off these levels, they're bouncing off them for a reason. It's because there's buyers here, right? It's because there were sellers there and buyers here. Once it got through that level, these guys took control and away they went. That's the beauty of technical analysis. Once you understand what's actually going on there, you can formulate a picture. This is a lot to do with imagination, right? You've got to be able to imagine what will happen once you've gone through that level. And my imagination tells me because there's such a strong level there, that's going to be retested. So choosing any pair to answer the question is based in my world primarily on what the levels I see on the chart and where price is in relation to those levels and what sort of patterns are driving this market. I know that's, well, it took a long while to give you a simple answer, but that's where I sit in that particular space. So recognizing the patterns, recognizing channels, recognizing boxes, recognizing consolidation areas, rectangles, triangles. That's my world. That's where I live. What Donald Trump's doing tomorrow may affect me. That's why I need to have proper trade management. But these will affect me far more. And that's why I spend most of my time on monthly charts and weekly charts, finding the potential level that price will go to next. And then I try to trade it, maybe on a daily chart, maybe on a 4 hour chart. Anyway, sorry, I hope that answers your question. It was very long-winded. Let's finally get to that chart that I was looking at, which may well affect, speaking of disruptions, I call them disruptors. You're most welcome. The disruptors are these things, these data events or news events or Donald Trump tweets. But that's all they are to me. They're disruptors. They're not a reason to be scared of the market or to not trade the market or anything like that. They're disruptors. So remember, I've got Euro CAD, pound Aussie. They're the ones I'm concentrating on this week. So these really are the only interrupters or disruptors, if you like, that I'm going to be concerned with. I don't care what the euro does on core CPI. That may cause a little bit of a flash, but I don't think it's going to be huge, right? Don't care what the dollar does. I don't care what the Kiwi does. I care what the CAD does. I care what the CAD does. I care what the Aussie does. But that's not going to happen till Wednesday. So what I will do is, if I possibly can, like I said, the market can move well and truly before I even wake up in the morning. I don't know. Kiwi news could affect the Aussie. Yeah, it could. I think the reverse of that is far truer than that. I think the Aussie affects the Kiwi far more than the Kiwi affects the Aussie. But point taken. I don't disagree. And of course, we do have on Wednesday the official cash rate coming out of New Zealand. So if you are of that opinion, then be wary of what pound Aussie is doing at that time. I would contest that by the time Wednesday morning comes along my time, I will be in a position to either A, not be in a position, or B, be in a safe position. And that would be the way I would treat that. So not so much this one, but this one certainly. I will be looking to be either safe or not in the trade for Euro CAD. Same applies for Friday. But there's a whole lot of water to go under the bridge before that happens, and that's why I'm not overly concerned about what will happen in the meantime. But most definitely, if you are coming to that area and you short Euro CAD, you're not in profit, or you're in profit but not at PP1, for instance, I would definitely be looking to get safe at that point in time. And ditto this area here for pound Aussie and Euro CAD. That's where I'll be focused. So guys, that's where I'm sitting. There's one more thing I want to look at, and that is the Nasdaq. Why? Because look what I'm getting. Looking at the weekly chart, what's that called? Followed up by that one there, which is not a game changer bar, but it is a serious reversal bar. And we keep getting them. This one is a game changer bar at a support level. If you put a line across there, you're pretty close to that as well. I'm keen on this to get short. I think under there is probably not where I want to be because of the monthly pivot sitting right there. This is why I've kept it on there. But I do think this is got a bit of pressure on it. This is the Nasdaq. I'm looking for something a little bit cleaner than what I've got. that's probably going to happen on a daily chart, I would imagine. So I'm looking for something to follow this up, a lower high off this game changer bar here on the daily chart. If I see that and I've got enough room to trade this the monthly pivot or even that support level there, which is clear to me, I will I will get some profit in the bank before I look to trade that further. But to me, the Nasdaq looks heavy, and I see this level here as a potential target, which could be weeks or months off, who knows. But I'm happy to stay in those trades if I get the opportunity. So, guys, that is it from my technical perspective this week. I will leave you, as always, unless there are any more questions, with what's keeping me awake at night currently. No, I won't. I'll tell you what I'm. Oh, they're those reversal bars on the Nasdaq. Same thing. They keep coming up, right? They keep coming up. So keep your eye on those. And guess what? On the daily chart from Friday, we've got one there sitting there right now. Rally, game changer bar. Look for the short. Bear in mind the market could open at a different price. But here are the things that are keeping me awake this week. Actually, there are a few other things keeping me awake this week, but these are the ones I've chosen. A single average cumulus cloud, believe it or not, weighs about 1 million tons. So when you look up in the sky and you think 1 million tons, gravity, what the hell's holding this thing up? So that's 100 loaded jumbo jets, roughly. So why isn't the cloud at 100 million, sorry, 1 million tons plus gravity? What's keeping it up there? That keeps me awake at night. Speaking of things astral, did you know that a day on Venus is longer than a year on Venus? How can that be? Don't believe me, do you? Well, here's how it can be. Venus takes 243 Earth days to rotate once on its axis, which in our terms is a day, but only 225 Earth days to complete one orbit around the Sun. So 18 days less for a year than a day on Venus. And the last thing that I'm going to tell you that keeps me awake at night this week is almost any mammal over 3 kilograms that's in weight takes about 21 seconds to empty its bladder, regardless of its size. I'm not sure I believe that, but being a mammal and being heavier than 3 kilos by some amount, I'm going to go and test it right now. Go on, I know you want to. Have a great week ahead, everyone. Thanks for being here.